going on? It's Scott Taylor with San Diego Real Estate Hunter.com, licensed in the state of California for both real estate and mortgages with an emphasis on San Diego. Now, you were just on my website and you filled out a form. You're probably looking for today's mortgage rates or maybe a San Diego mortgage finder. And I wanted to create this video, this educational video, to help direct you on the right path of where to go. Now, if you're just looking for, hey, what's my rate? You can go to a website like bankrate.com, right? Well, they'll say, hey, here's a rate for a 30-year fix. Here's a rate for a 5/1 ARM. Here's a rate for a 30-year F.H.A. Here's a rate for jumbo. Guess what? There's an asterisk. And that asterisk says, if you meet this criteria, right? And you have to read it, read it, read it, read it, read it, read it. And you're like, wait a minute. So that's not really going to be my rate, right? Or you're thinking, what's an F.H.A. loan or conventional loan or jumbo loan and like blah, 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 right? So I kind of wanted to create this video to kind of be like, hey, there isn't really a rate, okay? The rates vary and you have to meet specific guidelines to get those rates. And I want to create this and kind of lump it together as like your mortgage finder because there's so many different mortgages. You have no idea how many mortgages there are. And I wanted to try and simplify. Matter of fact, most lenders don't know, right? So before I begin, I want to be very, very clear of why I'm a little bit different. So if you walk into a bank or a credit union, you deal with just their products and their products only. If they say, hey, it doesn't exist or we don't, if they say, hey, we don't have it, it doesn't mean it doesn't exist. It just means they don't have it. Now, I work for a mortgage broker. I'm in between you, I'm in the middle, and we deal with wholesale lenders. So I can take this, your credit profile, to any wholesale lender in the state of California and find out what's best for you, right? So we don't fit you, so you don't fit into a product, we fit the product into you. We find out what's best. So now I want you to off the cuff. I don't like to do notes. I don't like to read stuff from a teleprompter. I just like to be off the cuff. This doesn't have to be hard, doesn't have to be difficult, right? I don't wear, I'm not wearing a suit and tie and being all stuffy. It doesn't have to be that hard. And that's why I just want to do these educational videos. Because like, hey, I get it. Let's simplify this so you can go from renting to buying a place, or maybe you're in a condo and want to buy a house, or maybe you want to refinance. That's what this is all for. I'm going to go through this very briefly, okay? So obviously I do loans all throughout the state of California. I'm not sure where you're watching this. I like to keep it simple and I'll just deal with San Diego in case you're from San Diego, as far as some of these numbers. So if you're looking to buy, right, I specialize in things like down payment assistance or first time home buyer or closing cost assistance, right? Where you get assistance to cover your down payment. Obviously you get a loan and you get assistance to cover your closing costs. You don't have to be a first time home buyer for that, by the way. Something else that I deal with is called the MCC tax credits, to where you can save up to 20% off your mortgage interest every single month and claim it via tax time, right? Called the MCC tax credits. Now, from those types of programs, of course, I deal with things like the VA mortgage loan, right? Where if you're a veteran before or now, right, active or prior, you could buy a home zero down in San Diego, anywhere in the state of California. You can buy it zero down. And then of course, from that VA loan, you could do a couple things. You could do a VA streamlined refinance. If you already had a VA loan, you could refinance that loan, either rate and term or cash out, okay? There's also loans like the F.H.A. mortgage loan, where you put down 3.5% and you can get a mortgage loan. It's fantastic, especially for people that might not have perfect credit, or maybe we need a little bit higher debt to income ratio. We could put down 3.5% and we can do that. And from a purchase, we could also do what's called an F.H.A. streamlined refinance. If you already have it, we can do a cash out or we can do a rate and term from there. Something that's also positive, great. From there, of course, there's conventional loans. We can put down as little as 3% if we go up to that 424-100 in San Diego. Or as much as as little as 5% if we kind of go up to that super conforming up to 649-750. So that would be a conventional. Kind of from there, there's loans like the Home Ready or the Home Possible, depending on zip codes. And by the way, regardless of like when you're watching this, because I'll keep it up to date as much as possible, rates are low. Regardless of what you hear and rates rising, they are so low, it's ridiculous. Don't even worry about that. Of course, one that I skipped that you could buy zero down if you're in select areas of San Diego is that USDA mortgage, right? The USDA is, like if you want to live in, I'm making up some areas in San Diego, Julian or Santa Isabel or Campo or someplace out there, you can get a USDA mortgage loan and you can buy it for as little as zero down, right? Some great things. From there, we have things like the jumbo mortgage. So if we have the conforming loan limit, then we go to the super conforming loan limit, and then above that, for San Diego at $649,750, you could get a mortgage loan, right? So you could put down as little as 10% on that jumbo mortgage, and you can get a mortgage loan for a purchase. And then of course you could do it even for like a refinance. One of the types of loans that my team's doing quite a bit now is the jumbo cash out refinance, where you bought maybe smartly in 2010, 11, 12, 13, when prices were a lot less, right? Values have gone up, and you might do a jumbo refinance. You might do rate and term, where just the rates are better, or you might do something like cash out, where you want to take some cash out of your property because you have equity to maybe pay down bills or credit cards or student loans, or maybe to buy a car or go for a trip, or to put down on a place, maybe in Palm Springs, maybe someplace else. You could do that. From there, we have things like construction loans, right? Where you have the F.H.A. 203K construction loan, or you have the home style renovation loan. Now, I'll be blunt, those are a little bit tougher to do on purchases, especially if you do permits, because the time frame, trying to get permits from the city and the contractors and everything lined up. On a purchase, it's a little bit tougher, especially with the market that we have in all California, especially in San Diego, but it's prime time if you want to do it for a refinance. So let's say that maybe you bought going F.H.A. And then 6 months or 7 months later, whenever you could do it, we could do an F.H.A. 203K in case you want to fix up your property. That's a fantastic loan to do right now, because when you think about it, you can get all your fix-up costs done at a low interest rate. I don't know, 4.5 or 5 or low 4s, depends when you watch this and how we structure it. Something I haven't talked about is something called a piggyback loan. So where you might only put down 5% or 10%, and then you have one mortgage, and the second one might be a small second, or it could be like a HELOC. That could be something that we do. You know, kind of as a caveat to that jumbo, sometimes if we just do one jumbo loan, then that rate might be higher. Sometimes we could structure it where we do a piggyback, and we have one loan at a lower loan amount, therefore the rate's lower, and then we have a second where the rate's a little bit higher, but because it's so small, when we look at your total payment, that just makes more sense, okay? So I've been talking for about 7.5, 8 minutes. I kind of wanted to end it there, just kind of wanted to go down all those different things. So if you want to work with me, how do we get started? I like to keep it as simple and streamlined as possible, because it's all about efficiency. You'd go to my online loan application at scottsloanapp.com. You'd fill out the application. As soon as you were done, I get a text or email alert. I'd pull your credit. I'd make sure that your credit score is okay for what we want to do. I would make sure that find out what your debts are, right? It says on your credit report. And then we have your online application. And then I'll say, great, what are we looking at doing? What's our structure? What's best for you, right? It's my job, not your job. Once you submit with me, it's like me and my team, like, all right, what's best for this client? How can we serve them? And that's what we do. Then I'll send you a list of supporting documents that we're going to need. Don't forget, whether it's a purchase or a refinance, it's a loan. So we need things like driver's license and social security card and tax returns and bank statements and W-2s and et cetera, et cetera, et cetera, just like you've done before or know that you need to do. Once you upload that via my secure website or via email, we process that loan and we're off to the races. If it's a purchase, then you go into escrow and we're looking at closing probably in 30 days or less. If it's a refi, we have our own in-house escrow office that's extremely fast. We can close a lot of refis in 21 days or less. We keep it as simple as possible. Once again, go to scottsloanapp.com to get started. And I look forward to helping you with your mortgage sometime soon.